Finance Bill 2026 proposes targeted changes to India's direct tax framework, focused on compliance simplification, rationalization of penalties and prosecution, and select incentives for global business and IFSC. In this video, I'll break down the key proposals and what they mean for individuals, businesses, and gift IFSC units. The proposals are organized under major heads: tax rates, ease of living, rationalizing penalty and prosecution, supporting the IT sector, attracting global business and investment, and corporate tax rationalization. First, tax rates. The memorandum notes there is no change proposed in the rates already specified in the relevant sections and schedules for the assessment year 2026 to 27 and the tax year 2026 to 27. One significant ease of living proposal. The due date for employer to credit employee contributions, currently tied to various labor law due dates, is proposed to be aligned with the income tax return filing due date for claiming deduction. This is proposed to apply from 1st April 2026 for tax year 2026 to 27 onwards. The memorandum also proposes rationalizing return filing due dates, especially for taxpayers with business income where audit is not required, and for partners of non-audit firms by extending the due date from 31st July to 31st August. For individuals filing ITR 1 and ITR 2, the due date remains 31st July. Another proposed improvement: extending the time limit to file a revised return from 9 months to 12 months from the end of the relevant tax year. So taxpayers who file belated returns late in the window still have a chance to revise. A fee is also proposed for revised returns filed beyond 9 months. The updated return mechanism is proposed to be expanded to allow filing in cases where a taxpayer reduces the amount of loss compared to the loss claimed in the original timely return, addressing stakeholder feedback. The bill proposes allowing payees to apply electronically for certificates for lower or nil deduction to reduce compliance burden, especially for small taxpayers subject to prescribed conditions. For resident individuals and HUFs buying immovable property from a non-resident, a TAN requirement currently creates friction for one-off transactions. A relaxation is proposed so TAN is not required in such cases. To address ambiguity in TDS rates for manpower supply, it is proposed to include supply of manpower under the ambit of work, so contractor TDS provisions apply. A major proposal is a time-bound scheme for small taxpayers to declare foreign assets and foreign-sourced income, with tax or fee based on the nature of acquisition and limited immunity from penalty prosecution under the Black Money Act, excluding certain cases like prosecution proceeds of crime. The memorandum sets out a decriminalization approach, shifting in many cases from rigorous to simple imprisonment, lowering maximum terms, introducing fine-only outcomes for small thresholds, and fully decriminalizing certain offenses. For IFSC and OBU units, the proposal is to enhance competitiveness by increasing the period of deduction to 20 consecutive years out of 25 years for IFSC units and 20 consecutive years for OBUs. It also proposes that business income after the deduction period is taxed at 15%. To attract investment, a proposal introduces an exemption for a foreign company for income arising in India by procuring data center services from a specified data center, with conditions including routing services for Indian users through an Indian reseller entity. Overall, Finance Bill 2026 signals stable rate structures with targeted compliance relief, process digitization, proportionality in enforcement, and select incentives, especially for IFSC and global investment themes. If you want an applicability checklist for your case, individual, business, or IFSC unit, we can map these proposals to your specific facts and timelines. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling compliances, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below zero to stay connected with us.